If you've taken a hit from the Bitcoin crash, don't switch off. This is your chance to flip the script. While crypto is falling apart, 3 ASX stocks are gearing up for moves the market isn't paying attention to yet. In today's show, we'll break down the Bitcoin outlook and then reveal how you can turn those crypto losses into potential gains by looking at the right stocks on the ASX. I'm Philip Tortevsky, joined by analyst Pedro Banales, and we are Wealth Within. Good evening, mate.
Good evening, Phil. Bit of trouble in the crypto space.
Yeah, crash is the word that's being thrown around. I mean, we're going to dive right into it now and have a good look at the Bitcoin chart, but don't forget after that, we've got 3 amazing stocks to show you how you can turn this situation into a winning one. And so let's start with Bitcoin first and get on the chart there. I mean, we've marked up a few things here. This was something we did a while back on a previous show, and I wanted to show how, you know, our forecast played out eventually in time. And I think we've been pretty smack bang on the money. I mean, there is this real correlation with Bitcoin, given, you know, how relatively new it is in terms of, I mean, it's been around since 2011, but from a trading perspective, once it got through that 20,000, it became ever so popular and continues to do so. But what's interesting about Bitcoin, if you did or didn't know, is that it moves to this from high to high about a 4-year period before experiencing a serious correction. And we go from the start of the data in 2010 to the high in November 2013. The market fell 92% after almost a 4-year move to the upside. We fast forward 4 years later to the month. That was the peak in Bitcoin in 2017. We then fell for 82% before finding the next low. Fast forward again, we moved up for 46 months from high to high, which then saw a 77% correction in Bitcoin. And that is why when we did the show a few months back and projected this out forward, we said, hey, well, somewhere around September to November, Bitcoin's likely to find the top. And we very well have done that now. We're starting to fall quite significantly. We've fallen about 30% with Bitcoin. We've taken out one of these momentum lines that have been trailing it up on the short sides for now. And so if we were to repeat history, I think it's fairly logical, and this number has been thrown around, albeit this might scare a few people, but 25,000 back for Bitcoin.
Yep.
That is not out of the realm of possibility. In fact, it is what has been proven throughout history to happen, and that also ties in very well with the longer term gradient of rise, which is around this momentum line. So if you're thinking about what to do with Bitcoin right now, we're going to show you some amazing opportunities on the ASX. But for me, your thoughts on this, I'm very simple. It's like if it closes below this momentum line we've got going through here, history tells us we're going to go for a pretty deep dive, and most people will continue to hold. Will think that it's just a minor pullback, which it may be, but right now it's not looking that way. So be very cautious of this month's close, I'm saying.
Well, another mistake that people do is they keep buying on the way down, dollar cost averaging, and that unfortunately is even worse because then you end up with double the position and double the losses. It just came out on the news that Andrew Tate got liquidated 84 times. He's in a loss of 700,000 USD by taking long positions, leveraged long positions on Bitcoin. So definitely don't follow that, so, you know, that scenario there.
But it's important to look at the chart, isn't it? It's so important because it tells you everything amidst all the hype, amidst all that, you know, positivity that people talk about with this, I guess, asset class. Realistically, Bitcoin is performing worse than one of the biggest plotters on the ASX, which is Telstra, this year. So it proves how much opportunity there is out on the ASX. I mean, the gold miners, the materials stocks, they are destroying Bitcoin's move in the last year. And so, you know, seeing something like this, it's important, if anything today, you open your eyes if you're solely a Bitcoin trader and go, well, hang on a second, what other options do I have to get into safe, you know, markets, regulated markets, where I can make just as much in terms of the upside? And it's prudent on the ASX. It's there everywhere. But I mean, any final thoughts on this? For me, it's looking bearish, and I think keep that 25,000 as a long-term target on the cards, because if we see a bit of buying potentially at this next low, we might fall down to around 70,000. If we do see an uptick in buying and we struggle around that 100, start reversing back down again, it wouldn't be out of the ordinary to say that, hey, 25,000 will be coming in 2026.
Yeah, I mean, you see those types of moves on the way down. We saw that back here in 2022. And if we put a horizontal line there, we can see that it did fall and find some support at a previous support level. What could happen now is we could find some support around that 70,000, which was a previous all-time high, resistance and support around here. If we do see a bounce at 70,000, just take caution, because it could be a secondary move, which eventually does bring Bitcoin down to that 30, even to that 25,000.
Yeah, all right. That's enough about Bitcoin. Let's get into some stocks right now and see what opportunities are out there for you to, as mentioned, to turn this into a winning scenario. So first up, we have AEL. Now, Pedro, this is a stock that is Amplitude Energy, I believe. Let's get to the chart and have a closer look at it. It's a energy stock, I believe. You're on
right.
top.
Yep. Yeah, they're a gas play. So
yes.
they're based in Victoria. They used to be called Cooper Energy, actually. They changed their name recently. But I think it's looking great on the chart. I mean, energy, I think it's in a long-term bullish trend.
Yeah, and what's important about this, I mean, if we just measure relative to where this is a stock that is not uncommon to also experiencing booms and bust cycles. So it's important when you're looking at it from the lens, you're not applying that Bitcoin approach that most of these new investors have been applying, which is buy and hold forever, that it's going to revolutionize the future and whatnot. Because as you can see, within that comes volatility, and that is also true for stocks. So I think this is a really nice trading stock, trends beautifully well, but at these levels at around $2-3, you can see the moves that it makes. 220% through there. There's another move back through here around $2 where the stock went up 260%. So really nice growth opportunity. And for a stock that is in this space, relatively smooth in terms of ups and down moves. You're not seeing any wild spikes either way. And I think that's why right now, this is one to be looking at, because it's a question of when is that moment where we are looking at a potential for a reversal to tick up. And while the first thing is that $2 level, so important throughout history, have a look at that. We found a really nice base through there. We've started to break out, which is really promising. And we've also now started to take out the downside. And I mean, this to me is quite exciting, quite textbook, as long as it holds. What are you seeing here, mate?
I love it. For me, it's completed its phase. We had the expansion, contraction, and then now it looks like it is holding up quite well above that $2. It's looking like it's doing something similar to what it did back here in 2016 when it consolidated sideways before breaking to the upside. So I love the way that it moves. You can put a nice trend below it. Even now, you could maybe put a bit of a momentum below it if you wanted to trail your loss on the way up, if you were to take a trade. Beautiful, formation there. So I would like to see it maybe break above that $3. If you wanted to be a little bit more conservative, that $3 mark looks like a nice little entry there, because we do have some clear pathway up to around that $7 at least, I would say. So that would be my next hardcore resistance level. So that represents, if we were to go for that $3 mark, and that represents a nice 145% upside. So much better than Bitcoin for sure. Yeah,
great. All right. Now, if you want to learn the skills that we've just shown with some of these techniques, please go and check out this book. It's How to Beat the Managed Funds. It is free. You just have to pay the shipping. The link is in the description below. But if you do want to take things to the next level, please go and check the website out. We do have a government accredited share trading course, which will teach you how to be a professional stock trader and take advantage of these amazing opportunities the stock market is providing right now. So please go and check the website out, wealthwithin.com.au. Now, let's move on to our next stock, which is GPT Group. But stick with us, because the one after is showing a setup that normally means massive moves incoming. But let's get to GPT now, Pedro.
GPT. Now this one, it's a little bit of a smaller stock, but it is looking quite nice. So let's just get straight into the chart. It is a REIT. It's in the property space. Now, already my eyes just go to this weekly chart here, this consolidation that's happening, and we can see a little bit of a canary in the coal mine there with that large volume that has come into it already. Volume has tapered off a little bit, but I think that if we do see a move above that level here, around that $5.60 on increased volume, I think that it's looking quite nice. And if that was to happen, I would expect at least a run up to around that $6, $7 before it finds some heavy resistance. But in the overall picture, in the whole grand scheme of things, I mean, you have to go back to the history. There has been a lot of price agreement around that $10 mark, and I'll just outline that visually. So even just here around that $8, possibly up until that $10 mark. So I would think that if it does break above that $6.50, then we do have a nice clean move up to that $10 and possibly up ahead, because we do see this stock sometimes does accelerate to the upside once it does break out of that $10 mark. So at least we've got that upside to that $7, which is 21%. But if we do make it to that $10, that's 85%. I think that's very achievable for this stock, especially if we have a nice rate cutting environment next year, if we do come into that, and if we do have that nice established trend now. We've also got that a bit of a momentum that was established back here since the low in 2009. So that's obviously the GFC crash there, property. It hasn't recovered since. Another reason why you shouldn't be just holding on to stocks, just to hold them. You have to be an active trader and be able to get in the opportunities and get out of the mishaps, right? So zooming into the chart here, that could possibly coincide with that high there. So we could find some resistance on that momentum around that $8. We could consolidate sideways for a little bit before that next move, but this one does look like it's about to take off.
Yeah, and I think for me, if you do want exposure in something that is not correlated with what is happening right now, obviously all the talk is about an AI, a tech crash, a Bitcoin crash, which goes hand in hand. This is, as you said, it's in the REIT space, completely not uncorrelated. Yep. You can see that generally throughout history, the moves on the way up when it trends well, and that lends itself well when you are looking to get that stable, nice growth. But also from a trader's perspective, I mean, I was chatting with a dude the other day, and he's going, well, I want a bit more action. I don't want to look at stocks like REITs or whatnot. And I said, well, why is that? Or because they move slow. And I said, well, explain why they move slow. And he's like, yeah, but by the time 10, 15, 20% is not what I'm looking at. But I then mentioned, well, how are you structuring these trades? And so if we go back to the chart, I'll explain what I mean, because when you're moving in a really smooth environment, being able to structure a trade is much easier, and it provides often the ability to provide those tighter risk-reward scenarios, which then allow you to, even in a smaller move, gain more than you would have to in an environment like a tech or a Bitcoin. Because if you were really playing it structurally sound in an environment like tech or Bitcoin, you wouldn't have super tight stops.
Yep.
If you did, you're going to end up in an Andrew Tate type scenario where you're liquidating every 10 minutes because of the volatility. These are the kinds of stocks where you can supersize the return even though they look boring, and more often than not, you're giving yourself that opportunity to get those through, because you're not going to get volatility whipsawing you in and out. And I think it needs to be said for something like this. If you haven't thought about it, have a good think about it, because if the mindset is I need to be in the most dangerous spaces in the market, you might be cutting yourself short. So
I think that's a great point, because you could actually find a great strategy that works on this, that gets you 5% return consistently, right? Then all you have to do is move the decimal point. There's things like leverage, there's derivatives that you can trade. So if these are a lot easier to find a strategy on than those volatile tech type stocks.
Yeah, great. All right, time to move on to our next stock, which is Hansen Technologies. Now, Pedro, this one here, if we go to that chart and have a look, is a stock that is somewhat tech related, if you will. I mean, it provides
payment
structure facilities for some of those players. But when I think, okay, tech crash, Bitcoin crash, that happened in November. Hansen Technologies, that's not a crash.
Stayed up.
November, it's green. And so when you can find stocks in sectors that are the outlier or performing super, super well, what does that tell you about that stock moving forward, right? And that resilience that's where you want to be, to look at some of those foolproof stocks to give you that opportunity. And I think the way this one's lining up is really, really interesting right now. I mean, very similar formation to what we saw back in April 2020. We're now starting to come out of that, which is really exciting as an investor. This one we've been watching for a little while. That was crucial that we broke out of that. This pullback is really important. I mean, the way it's happening in November right now, if we can get a nice close above that October high, then I think this might be ready to finally get going on its next leg up. And we've seen it time and time again. This is a current one. Back in February in 2020, we saw another period where the stock resembled that. also in 2011. So we're getting ready for the onset of potentially a really strong bullish move. And that's what's exciting, because when we do break out, you know, these moves aren't small. And this is a stock, as mentioned, it's relatively safe because the area it works in, it's with, you know, real stable companies.
Yep.
So it is defensive somewhat, even though it is can be considered tech.
Yep.
So if you're looking for a defensive tech option, I don't think there's any better right now, when it's proven that throughout history to provide appreciation after appreciation, new highs after new highs. And so this one for me is definitely one to keep on the list. Really watch how it closes above this $5.80 to $6 range. I think that's important. And in terms of momentum on the way up, well, we've got this beautiful trend line that the stock's supporting right now. So it's all that's left for me is, you know, a nice close and having a look at a nice risk reward strategy. And this might provide some really nice long-term opportunities relatively early into the next wave up.
Oh, it's looking very nice, isn't it? And
Yeah.
I think that this is a time to be looking at these types of stocks, especially the ones that move like this, because what you often see, and what I've seen, many of the students that come to us and say, every time that I go into a stock, it seems to turn against me. Why is that? You know, it's like somebody knows that I'm buying, because then it goes against me. And I said, well, it's where you're buying and what under what rules you're buying, what stage, what cycle of the stock are you buying. All these things you need to know, because when these types of moves happen, it's only up here where it starts to come out on the news and you see it in forums and everybody's talking about it. If you buy at these levels here in 2016, say around that $4, you'll be sitting on this for the next 4 years just doing nothing. And then maybe you'll get sick of it, you'll sell out of it, and only for that move to happen again. And once again, 2021 at that peak, that's when everybody's talking about it, that these types of stocks are coming out. Even Bitcoin was going crazy. Yeah. That's when it comes out on the news, people buy into it only for it to fall away. So you want to get in before the crowd, you want to be a contrarian, you want to follow some proper rules and look at the structure, get in at the opportune time, so then you're in on this move. That is the most chunky bit of the move. So it's looking like it's setting up beautifully. Yeah.
Did you want to go to the weekly chart real quickly just to see? Right now, I think what's quite interesting about the weekly chart is we had that big gap back in July 2025. Like most stocks and most occurrences, gaps do go and get filled, but it's important how that happens. I mean, we didn't completely fill the gap, which is quite a bullish sign.
Yep.
We picked up buys right away from that level. So I think for me, that's the line in the sand. Even if for the short-term players out there, you can see once we came back and bought up that gap through there, price never really wanted to go below $5.46. So I'd be watching that quite closely. I mean, we had a bit of selling back in October 25. Buyers pushed up, didn't really want to take out the selling, but now, you know, it's in a bit of that sidewaysy type chunky, not chunky, I'll pinch the word off you. You got chunky in my mind, which is interesting. But anyway,
hungry.
Yeah. Anyway, let's not go off topic. It could mean a few different things. But let's go back to the chart, please, and have a look at what we're seeing now with this consolidation. And I think right now that's the big play. 590, 540 in the short term, as long as it holds above there and starts to break on out of that 620, 640. This looks pretty exciting for me.
Yep, same. That pattern that it's unfolding right now, excellent. Love it.
Great. All right, now if you want more hot stock tips, check out our video, 3 market crash proof ASX stocks to buy ASAP.